blockchain technology and the tokenization of real-world assets. I believe that this has the potential to increase financial inclusion for everyone across the world. And I want to look at Africa in particular because this is the continent with the most untapped potential. Africa stands at a historic turning point. The convergence of digital technology, demographic potential, and untapped natural wealth presents a once-in-a-generation opportunity for transformational change. In this video, we'll explore how blockchain technology and tokenization can revolutionize wealth creation in Africa. We'll dive into the mechanics of blockchain, the tokenization of real-world assets, the role of sovereign wealth funds, strategic Bitcoin reserves, and how all these tools, if harnessed properly, can enable Africa to build equitable, sustainable prosperity. But we'll also address the hard truths, the regulatory uncertainty, the infrastructure deficits, and the political complexities that make implementation uniquely challenging across the continent. So let's begin. Blockchain. What is blockchain? Blockchain is a distributed ledger technology. It records transactions in a secure, decentralized, and transparent manner. Every transaction we have is validated by a network of nodes bundled into a block and linked to the previous block, thus creating an immutable chain. And that's where the name blockchain comes from. The key features of this blockchain are its transparency, as all participants can see the same data, its immutability, once recorded, transactions cannot be changed, decentralization, so there is no single point of control, and its security, because of the cryptographic algorithms that are used to protect data integrity. Now, blockchain enables peer-to-peer transactions without intermediaries. While best known for powering cryptocurrencies like Bitcoin and Ethereum, its utility extends far beyond finance into governance, supply chains, identity verification, and crucially, asset tokenization. Now, let's look at the tokenization of real-world assets. Tokenization refers to the process of representing ownership of a physical asset, like land, minerals, real estate, or commodities, as a digital token on the blockchain. So, for example, a mining company in Malawi could tokenize a rutile deposit, issuing digital tokens that represent fractional ownership or future production rights. These tokens can be traded globally, which attracts capital, increases liquidity, and it democratizes access to investment opportunities. The benefits of this are: 1. Fractional ownership. So small investors can own pieces of large assets, where in the past or currently we have the stock exchange where there is a limit to the inclusion that can be provided because share prices in, let's say, Apple, the price of one Apple share, its price might be prohibitive. It can't allow smaller players into the market. But if you have fractional ownership, it would be as if a person can buy a fraction of an Apple share. That's what we're talking about when we say fractional ownership. Then we have liquidity. So illiquid assets suddenly become tradable. There is transparency, as the smart contracts can automate compliance and track usage, and inclusion. So locals can benefit directly from the value of natural resources. This approach decentralizes wealth, allowing communities to participate directly in the growth generated from their natural resources. Now, I gave the example of rutile, which is used in the production of EVs. Now let's look at rutile tokenization, and we can find it analogous to the situation in the UAE and what they did with their oil futures. Look at rutile, a rare earth mineral critical for EV batteries and aerospace technology. Malawi and other African countries are rich in this resource, yet struggle to convert it into broad-based wealth. Compare this to the UAE, which turned oil into financial power using the Dubai Mercantile Exchange and the global futures market. They monetized oil without selling the land or the resource outright. Tokenizing rutile could have a similar impact. We issue tokens representing future rutile production, raise capital through decentralized global markets, and use smart contracts to allocate revenue to local communities, infrastructure, and sovereign funds. This flips the script. Africa no longer has to be a supplier of only raw materials, but a participant in the global financial system. Now let's look at sovereign wealth funds and strategic Bitcoin reserves. A sovereign wealth fund is a state-owned investment fund, typically funded by resource revenues. It invests for the long term to preserve wealth across generations. For example, Norway's government pension fund Global, which is one of the world's largest sovereign wealth funds, was funded by oil revenues and has over $1.4 trillion in assets. Africa can replicate this model with tokenized mineral revenues and reinvest into infrastructure, education, renewable energies, and strategic reserves, including Bitcoin. Bitcoin reserves act as a hedge against inflation and currency devaluation. For countries facing foreign exchange shortages and weak currencies, a portion of SWF assets stored in Bitcoin could offer digital sovereignty, global liquidity, and inflation resistance. Combined, these sovereign wealth funds and Bitcoin reserves offer financial resilience, fiscal discipline, and intergenerational wealth protection. The current model benefits a narrow elite. Tokenization, when properly regulated and transparently executed, can redistribute opportunity and wealth. This is wealth creation for the people. Citizens can receive token dividends from national mineral funds. Young entrepreneurs gain collateral through tokenized land, and diaspora communities invest in local development via blockchain bonds. Over time, we may find that this builds a genuine middle class. It reduces aid dependency and encourages domestic innovation. Here are the challenges in the context of Africa. We have regulatory uncertainty because many governments have yet to define legal frameworks for crypto or tokenized assets. Some have outright bans, such as Nigeria, while others are exploring regulatory sandboxes. So we have to get around the regulatory hurdle. We also have digital infrastructure gaps where tokenization depends on internet access, mobile penetration, and affordable data. In Africa, affordable data is one of the major challenges, as well as internet access. If we're talking about the rural population, then the internet access is close to non-existent in many places. We do have mobile penetration, but the mobile phones that are widely available in many parts are not internet capable. But if we have mobile penetration, greater mobile penetration, and when the cost of these technologies like internet capable phones reduces, then we have greater internet access potentially. But that is the main digital infrastructure gap. The rural areas often lack connectivity. We also have low financial and technical literacy. Blockchain concepts, they remain inaccessible to much of the population. So without education, adoption will be elite driven and limited. Then we have governance and corruption. If the existing power structures co-opt blockchain to entrench themselves, the technology could end up worsening inequality, which is one of the major threats of this technology, that the ruling class, the ruling elite, the governments that are in power, if they end up being the ones co-opting all the blockchain technology and using it, then they further their position, they strengthen their position, while the common man is excluded. So that is a threat. And then we also have currency volatility. Stablecoins can offer a solution, but the lack of trust in local financial institutions could still slow the uptake of blockchain technology. These are my recommendations in order to fulfill this financial inclusion that can be spearheaded by blockchain technology. First, we have to invest in digital infrastructure, that is leveraging public and private partnerships to expand 4G, 5G, and satellite internet. We have to create regulatory sandboxes which allow experimentation with blockchain projects in a controlled environment. If we establish sovereign tokenization frameworks, i.e., define legal standards for the issuance, custody, and taxation of asset-backed tokens. And we must promote financial literacy, partnering with schools, churches, and mobile operators to educate citizens on digital finance. And finally, there has to be a building of public trust. Use transparent governance models, such as open source smart contracts, to show how token revenues are spent. In conclusion, Africa doesn't need to follow the same path the West took. It can leapfrog ahead. By embracing blockchain, tokenization, and strategic reserves, African nations can transform natural wealth into shared prosperity, attract global investment, and secure financial sovereignty for generations to come. The tools exist. The main question is, do we have the vision to use them? Thank you for watching. Like and subscribe, and comment below with your thoughts, your recommendations, comments, and concerns.